Hey, what is going on, everybody? Welcome to another episode of the Rapid Review. Couple apologies. Apology number one, super late today. It's completely my bad. Apology number two, on YouTube, I put PM instead of AM, so confused a couple of people, but we're live now, and hopefully, if you're looking at this, expecting me to be live at 9:30 p.m. You're just watching the replay. So again, my apologies, but appreciate everybody joining live. Appreciate everybody over on X and on YouTube. As always, chat's open on both. Questions, comments, stocks you want me to look at, drop it in the comments. Even if you disagree, please. No one's really doing that. If you disagree with what I'm saying, even the smallest thing, just throw it in the comments and we'll get a good discussion going. Other than that, look, we're going into the final weeks of the year, ending off 2025. So we're going to be talking about how should we be approaching this market going into the end of the year. So without further ado, it's time for the rapid review. All right, let's get started. What is going on, Chad? Appreciate you saying what's up. Disclaimer, as everybody knows, this is for educational and informational purposes only. This is not financial investment or trading advice. Lead through the disclaimer. You know the deal. All right, current state of the market direction, uptrend, power trend on. Looking at distribution days, we're at 6 on the S&P, 4 on the NASDAQ. Now, I know some people are disregarding distribution days, right? Some people are looking at, we went to a corrective status, we wiped out our distribution, so we're no longer worried about that past distribution because we found support, we've continued a new rally, not a concern. IBD, they are still tracking them. Market school rules, still want to track them. So I've decided based on those two metrics, and I don't think there is any harm in still tracking them. If they are invalid, they'll fall off naturally. So, yeah, that's where I'm at in terms of why I'm looking at distribution days. But let's look at the actual distribution day tracker. So like we said, we had 6 and 4 in terms of distribution days. Looking at the S&P. So Monday we added the distribution day on the first day of December. Gained that there. On Wednesday, we dropped the 1028 stalling day, which you may remember was floating around up here for a very long time. That dropped off exactly because of that, due to time. Thursday, we lost the 1120 distribution day, which was that big kind of full range bar, and that dropped off due to price action. So that got us to the current 6 that we're sitting at in terms of the S&P. Over on the NASDAQ, so the NASDAQ also added distribution on the first day of the month. And then in terms of anything else, Friday on the 1030 distribution day, this Friday, we lost that 1030 distribution day, and that was due to time. So looking at next week, the S&P, we have the 11.4 and 11.6 distribution days, both going to drop off due to time. So that'll be a big drop with those two names coming off by the end of the week. There is a possibility we could lose this November 18th day. We really only need like a 1.19% move in the market to drop this off. So possible, excuse me, possible we could see that drop off. Going over on the NASDAQ, it's really just the 11.6, the same as we are seeing with the S&P dropping off after 25 trading days, which will be Friday of next week. But if that does happen, we'll have 3 distribution days on the NASDAQ. And even if we don't get this distribution day dropping off here, we'll be down to 4 on the S&P. Again, for those who ever don't know, my distribution day count might be slightly different than IBD, but the real big thing for me is it's the same exact rules. It's just coming down to volume, and volume on the indexes can be very funky depending on the sources. So I'll look at a ton of different sources to make my overall decision. I normally err to the side of counting distribution, a little bit more cautious. And this again is just really a secondary indicator. Price and volume in the overall indexes is more important to me than anything. Those key price levels, highs, lows, moving averages, more important to me than just the distribution. So yeah, that's what we got there. Brian, awesome. Couple names I like those. We'll look at those names when we get over to the stock section later on. And again, anybody else that is watching, feel free to drop it over there. All right. Looking at the current state of the market in terms of what went on this week, the S&P up 3.31%, Nasdaq up 0.91%, Dow up 0.52% over there. On the S&P, up 16.81% for the year, Nasdaq up 22.10%, and Dow up 12.74% for the year. And I'm just realizing, this is what's great about doing this live. You guys get the completely uncut version of me making screw-ups. We're not streaming on X, so we're going to start that up for those people over there. This way they can see. All right. All right, so getting back into it. In terms of the closing range, and we'll look at the weekly charts, you can see the closing range. You'll see the closing range is the S&P at 73.51%. Closing range for the Nasdaq for the week up. Closing range 82.12%, and Dow 79.47% there. All right, moving averages. So a couple of big changes to the moving averages. The 10 and the 21 have now crossed above the 50-day simple moving average, and that is now staying consistent. Super, super positive. Just confirming that we're in more of a steadier uptrend, and it's not just a quick blip up and blip down, choppier market. We're starting to see that trend smooth out and go upwards. The 21 has also crossed. The 10 is also crossed above the 21, which is also another positive sign. So if you're looking at these moving averages, right, we're actually sitting exactly how we want to sit on all these moving averages, all the way from the Russell, Dow, Nasdaq, S&P, all sitting 10 above the 21, 21 above the 50, 50 above the 200, and the price above all. That's the ideal uptrend situation that we're looking at. Does not necessarily mean that this will continue, but it's just overall positive sign. And especially when I see the transition back to this is a very, very good sign to me, right? If we're trending like that for a while, don't really care. But when we either have things switch either to the negative side or to the positive side, that switch sometimes could be a little bit more of a confirmation to what we're also seeing in terms of price action. All right, indexes. Let's jump over. Let's take a look at what's going on. As always, we start off with the NASDAQ. So with the NASDAQ, we had another up week in a row, which is super, super positive. We are continuing to rally off those bottoms, but we are not entirely in the clear. Not the most exciting week, but there's nothing wrong with that. So when we started off the week, you can see over here on the 1st, that was that distribution day that we gained, right? We had higher volume, especially after we had this real tapering of volume as we kind of rallied. And then we kind of pulled back, had a little bit higher of a volume day, gained that distribution as we were down. Not too concerning to see this happen, right? Not entirely concerning, given how we kind of rose off the bottoms pretty rapidly, broke back above those moving averages, and it was a pretty quick and powerful move. So kind of somewhat expected to see some sort of a pause, and with how low the volume was, especially with the holiday week. Oh, good call. Jeez, I'm a mess today, guys. Complete and utter mess. All right, thank you. I appreciate that, Happy. All right, so now you can see what I'm talking about, right? We have the yeah, Brian, you should be able. All right, yep, you guys. I'm seeing things a little delayed, so now you guys can see everything. All right. So back to what I was talking about, right? We had the rally off the bottoms, really strong move, the volume kind of tapering down here, kind of expected that we were likely going to at least pause. So we pulled back. We had the distribution day. One caveat to this distribution day that I do want to mention is that this was the holiday week, so the volume was likely lower than we normally would have. So the signal triggers a distribution day, but I don't know necessarily if this is like a, oh my God, ton of selling coming into the market distribution day versus just the comparison to the holiday week before. likely causing some kind of that trigger. Hopefully that makes sense. The big thing that was really good, though, in this was we found that support over that key level that we've constantly been talking about, which is the 1010 highs and also this full range 1120 high. We found basically support right at those levels. So with how rapidly we rose, if this market wasn't really going to be healthy, we'd probably see a break through that level. So the fact that we found some support there, and really as we tried to break down below that area, the bull stepped in. That was positive. In terms of the rest of the week, it was just kind of a lackluster, slow climb. Volume was pretty consistent throughout the week. Nothing super exciting when you kind of look at just in general the volume that we've seen through the chop. Nothing super exciting, but just a nice slow, steady climb. And kind of nice to see that. Kind of nice to see this volatility that we've constantly have, even on the upside, the downside, just smooth itself out to just like a nice climb. You know, yeah, you open the market and there was no more like, are we hugely up or hugely down? It was just like, oh, we're up, we're down, we're a little flat. Nice, calm week, which, like I said, completely welcomed. Yep, and happy. Huge big point to make there. Like we were saying, we are living above that 21 now, right? 1, 2, 3, 4, 5, 6, 7, 8 days in a row above that 21 trending up, 10 trending up, 50 still trending up, obviously. Like that, we're seeing that really right there. And then here we had that 10, 21, 50 all crossing. So moving averages are looking beautiful. Very good point. Good thing to add there. But really, like, that's kind of it. There's not a ton to unpack here. It wasn't like we were just like, this volatility that we've had is really kind of like, looks like it's starting to just calm itself down, which is really nice. Looking at the weekly, you can see that second up week of lows, we come off those lows. So really, as I always do, looking at kind of those key levels on the upside, it's this 1029 high. Can we make new all-time highs? We're kind of coming out of this like recovery base type of pattern. We're seeing a lot of stocks with this type of pattern as well, which is positive. So can we get above those highs? And on the downside, we continue to look at the 10 and 21 as we always do. From there, again, we're going to continue to see, especially with the lows of the 12.1, the highs of the 11.20, the highs of the 10.10, the lows here. Like you just see there's just like this kind of line where there's just a lot of support and resistance kind of around that line. Hopefully we could still find support. If we break down back down below that, then going to get more concerning again. The 50, as always, we'll look at that. And then from there, it's that prior low, which was a lower low from looking back here of the 11.21 low. Keeping an eye on that on the downside. We'll look at the S&P just for the sake of visually seeing it, but really not much different action. Much closer to getting to these all-time highs. Didn't come in as tight to kind of these levels, like a little further off of that 11.20 high and well off of that 10.10 high in that kind of pullback area. So yeah, overall this is looking healthy as well. Not much else to say. All right, so let's jump and go over to Deepvue. Remember to switch my screen now for you guys. And let's look at the theme tracker. For those of you who don't know, I am a Deepvue partner. This is the tool that I use for all my trading analysis from stocks, industries, themes, screening, charts, fundamentals, everything I'm doing through Deepvue. Really love the application. They have done an excellent job. The waitlist is over. So for anybody who is interested, you no longer have to join the waitlist. You could, in YouTube, just go to the description. I have a link there. You can check it out. And then on X, you guys can go to my bio, is where I have the link there. And you can also use, if you want to sign up for an annual, code Bobby12, BOBBY12, all capitals. That'll get you 12% off of an annual membership as well. All right, so looking at the themes, right? Theme tracker, looking at the week. So big thing here, silver miners continuing to show strength. One of the things that stood out to me was Quantum. Quantum went on a really, really strong breakout run and then completely just corrected, brutal correction. Now looking like it's trying to put in a low and possibly work to building bases. So too early to really start jumping in and buying any of these names. Most of them aren't presenting any buy points, but definitely going to keep an eye on this group if it can form a base and give some buy points. Semiconductors also showing strength again. We're seeing, I would say, the broad-based semiconductors, this is the group showing strength. We are seeing some weakness in stocks like AMD, even NVIDIA, not saying it's the most powerful, but there's a lot of semiconductor names that are looking really, really good. Some of them that have just ripped out to all-time highs and kind of ran past any viable entries, but still something to entertain is the fact that these semiconductors are doing well. Like we said, silver miners continuing to rally, really, really strong there. Really, like I said, in general, a lot of these stocks and groups are looking like they're putting in bottoms and possibly trying to form bases, which is super, super positive. I say looking because this could just be a fake out bounce where we bounce and then kind of roll back over and make another new low. That's why we're not just buying, trying to predict the lows. We're waiting for these patterns and entries to form, giving us a higher probability setup and a place to assess our risk to make our trades. But overall, just looking at like the 1 month and just kind of 3 month, just the overall view of what we're seeing in this theme tracker, silver and gold miners continue to show strength as they have all year. Gold miners really looking like they're trying to break out, almost giving you like a VCP pattern. We'll look at some of those names are on my list to look at. Excuse me. Some of those names are on that list that we're going to look at later in terms of stocks. Rare earth metals. Sorry, that's later. We'll talk about that when I go to the ETFs. Medical continues to show a healthy, strong trend. And then you also have, especially in here, you can see like oil and gas, banks I've been seeing pop up a lot, retail popping up a lot, airlines popping up as well in that 1 month time frame. So a lot of those names showing some interest there. So let's go over to my ETF tracker. If you have any interest in this list of ETFs that I use for my top-down analysis, you can just reach out to me. Reach out to me on Discord, reach out to me on X, send me an email, which I'll have at the end. And actually, my email should be in the YouTube description. Just tell me you want the ETF list, and I'll send you a copy of the Excel sheet, and then you can implement it into any of the platforms you're using. All right, so let's reset this for a second. Let's look at this 1 month RS. So right off the bat, and this is why I like to do this, I like to see the chart, right? I like to know, is this on a just exhausted long run? Like, yeah, it's great if it's showing strength, but are we like super extended? Are we coming out of the base showing strength? Where are we at in terms of the trend? So silver overall, let's get on to the daily, looking like, look at that perfect cup with handle on those silver miners. So what that tells me is I should be paying attention to that group. There's very likely I'm going to be finding the similar pattern in those groups. And if I can't, I could play the ETF as well if I really want to play that group. And this is one of those that, like, it looks beautiful. Really, really beautiful. So silver, again, you're going to see a couple names that are very similar. They're all in there for different reasons. I'm not going to get into it, but you can see these are a little more extended. Copper, going into those metals, miners, gold. We're seeing these VCP type of patterns really forming in a lot of these gold miners. Again, we'll look at those later. We were getting this big 1, 2, and then like that 3. Perfect, like VCP starting to form, seeing things kind of tighten up volatility wise, coming near those all-time highs. Looking beautiful as a kind of way to look at what's going on over there. Drop these drawn bars too so you get to see more. Rare earth metals, just mentioned that again, looking like possibly getting some sort of a VCP minus this little right there. But seeing that volatility tighten up, seeing things kind of trend sideways, possibly forming base patterns there. Biotech, this is what I'm talking about, right? Biotech has gone on a really strong run, pulled back to the 10, continuing to keep going. Yes, there are some patterns forming, but this trend has been trending for a while. So just being conscious of where we're at in the life cycle of these trends. And then healthcare equipment. You see that kind of quick pullback and breaking out, and there are definitely a ton of names in here. Metals, minings again. And normally what I do is I quickly go through the, up to the like 90. So here you can see, right, with the weekly versus the daily, really still looking like we might be trying to get into a stage 2, like in terms of Stan Weinstein type of analysis, uptrend with the oil and gas. Pharmaceuticals had a big run, looking like possibly pausing. More pharmaceuticals. There's your oil and gas. And again, looking at that bigger uptrend, right? It looks like a great uptrend here in the short-term days, but we got a lot of overhead resistance in these oil and gas, looking like it's maybe starting to get a stronger stage 2 uptrend. And yeah, biotech just ripping. Banks, like I said, banks looking like it might be trying to turn around. It's retail. We saw retail already. Steel, transportation, communications. Now we're starting to get towards the end. There's gold shares again. Gold, there you go. That VCP pattern, right? 1, 2, 3, like tightening up here, like just beautiful. This is what we love. And this is why I rather be patient. I haven't been doing a ton of buying in the market, not through this crap. Like now the things are really starting to tighten up, give me better entries, less choppiness. This is where I want to start putting a little bit more gas into the market. All right, that's where we go. That's where we got on ETFs. Again, if you want this, reach out to me. You can check my email and just shoot me an email. Say, hey, just throw me that ETF list, and I'll send it to you with the Excel. All right, so exposure levels. All right, how do we approach going to next week? Overall, I am continuing that cautiously optimistic outlook going into the market. This is definitely a lot better looking of a market than it was a couple of weeks ago. We have yet to have any real true negative signals in the last 2 weeks. Things just kind of turned around and have just continued upward without really saying like, ooh, like this doesn't look great. It's just, it hasn't confirmed itself is essentially what it is. It's more of a like, it's not saying that there's something wrong, but it's just hasn't confirmed anything. And I think we just need to be a little more patient to see things be a broader based move and see more breakouts. We continue to see many stocks climb. Some of these stocks have broken out and gone on runs, especially in that healthcare space. But then there are a lot of other names that have looked like they're forming these great patterns, but haven't necessarily broken out into these all-time highs and started trending. So we're just kind of looking at those patterns and just watching and waiting for those pivots to pulse into the market. So for this reason, that's really probably why I'm being the most patient. It's not like I'm finding like perfect setups everywhere and I can just keep buying stocks and I'm like trying to decide what to buy. When I see that where it's like, oh my God, there's so many things that I can buy and I have to really narrow things down, that tells me that this market's, a little more broad-based, a little stronger. When it's less and I'm like trying to find things to buy, it tells me to check my gut and just make sure I'm not forcing any trades and letting the market force me to buy those stocks, not the opposite way around. But just, yeah, continue to focus on those leading names, continue to focus on the leading groups. Continue to focus on good, solid setups. Do not feel like you have to dive into the market. Be patient. Let the market pull you in. Think risk first. Have a plan. Know where your stops are. And slowly increase exposure. You shouldn't be going from 0 to 100% or from 20 to 100% or 50 to 150% invested over a day or two. Let the market confirm. Let things slowly pull you in. And if it's going to be a longer term uptrend, you're going to get dragged into it and you'll be happy you did. Right now, I'm about 50% invested and I'm pretty comfortable and happy with that. I have some tight stops and yeah, that's where I'm at. All right. Let's jump back over to Deepvue. And let's start looking at some stocks. So I have a list that I'll bring up. But to start, let's see. Brian, you want to look at Hood. And this was also brought up in Discord as a question of, can you bring this up? Get rid of this. I left on here. We all know what Hood does. We all have probably looked at the fundamentals, so I'm not going to go really on from there. This is one of those very quickly just being patient type of stocks, right? It's done a great job. It had a nice deep double bottom with a handle breakout way back here. This was beautiful. This is what got me into it. Really, really nice setup. But being patient with these, right? Because here's a perfect example. If you start, like, I understand there's going to be some swing trades, early entries in here, but sometimes when you're trying to buy in these, as it's coming off these bottoms area here, when things are just kind of figuring itself out, it can get a little tough to stay into those. So look for an area of tight entry. I could see people saying, well, okay, we did break back above the 50. I got in there. Fine. I'm using the 50 days, a tight stop. Fine, if that's your setup. But I personally would like to see this kind of come up a little bit, tighten up, maybe give like a little bit of like a tight area to kind of shoot against. Maybe go on a rally, pull back into those moving averages, something that's a little more showing that this is a perfect example, right? The Stan Weinstein 3A stage that's in. Are we out of that 3A stage, right? It could just be a little fake out and then roll back even lower. So I want to see us get a little more confirmation in this before I'd be willing to jump in and present a little bit better of a setup. The next name we got from Brian. And again, if you guys want stocks, just shout them out. Why is this? Hold on. There we go. Just typing in the wrong spot. Brian also wants CRS, Carpenter Technologies Corporation. Not a name that I am super familiar with, so we'll just take a quick look. I love doing this live too because you guys get to see what I'm thinking, and it's kind of all on blast. If I say something stupid in the moment, you guys get to hear it. Manufacturing, fabrication, distribution, special metals. Okay, so looking at the fundamentals, solid annual, triple-digit annual. Sales, lackluster. Same kind of here. We're seeing pretty good quarterly, lackluster annual. All right, fair. A ton of institutional sponsorship coming in here. Steel has definitely been looking good. You can see that in the industry group ranking over the last 3 months and 12 months. Relative strength over the last month kind of sucks, but 12-month and 3-month looking good. Decent ATR, not too volatile. Strong ROE, 25%, really, really good. All right, so weekly we'll look at first. Clear uptrend. Probably a couple bases in there. So starting to get a little later stage, not super late stage, right? It's probably initial breakout, maybe like here, one pattern, 2, 3. Like starting to get a little in the later stages. Not too concerning. And then from here, we got a pullback. I'm going to disregard that day. The main area of the pullback is like kind of like tight area right there. Not necessarily like a high tight flag type of move right here. Like I know some of you might be looking at this, but really strong, not a textbook high tight flag, but is flagging. So 43%. So really good to see this high volume move and then this sideways action from here. So I do like that. And if you kind of just draw a line, give or take there, give or take right around there. And you can see this kind of rally, flatness, tightness kind of forming over here, consistently riding with those moving averages. Happy, yes, I will look at CCJ for you as well. So yeah, I like this. I would like to see either a little bit more of a kind of possibly, I'm trying to think of this out loud. This is what I'm saying. So we broke below that 21. Can we kind of rally back above those moving averages? Maybe a reclaim if you want to use that as a way to get in. If you maybe drew a trend line, using that to kind of get in. Overall, though, this consolidation I do like. So if different types of entries that you guys use, whether it's swing trade entries or even for the more position trader, just breaking out to all-time highs from this range, I do like that. So yeah, good name. I like it. Cool. All right, Brian, we'll come back to your other two. I didn't forget about you. Let's look at Happy CCJ. So Happy, you said you took a CCJ low cheat. Camco, I'm sure this is on a ton of people's lists. I'm gonna guess where you made this entry. Low cheat. If I'm you, I'm gonna guess maybe on the 4th you took that position, or on the 3rd. So on the 4th, coming out of this range, either you took this position, or on the 3rd, thinking maybe we kind of tested below the 50 and then broke back above the 50 again. You tell me where you took that entry. This has been one of those stocks that has been on a lot of people's lists, has had a really, really strong uptrend. That oil and gas that we've been talking about, that kind of industry is starting to really percolate again. So that is a positive. The last quarters kind of suck in terms of sales and EPS. So it has been a little choppy last year, same kind of thing. And annual sales are okay. Great institutional sponsorship. Horrible ROE, but whatever. Not the most concerning. For me, I'm just not looking to enter this on a more of a low cheat. I'm looking to see if this could kind of form more of a real base, tighten up, VCP type of action, certain things like that. And you said correct on the 4th. Yep, that's right. That was more what I was leaning towards, but would like to have seen more volume come in on the 4th, because this reversal had a little bit higher volume and just lackluster move. But again, for me, I'm just looking for a little bit more confirmation. I do tend to trade more towards position size, VCP, position style, VCP type of patterns, and most of my cheats, I like to see a little more defined. But I'm still perfecting that part of my approach. And Brian, why is it called low cheat? It's called a low cheat because when you look at things from a traditional CANSLIM perspective, you look at these all-time high breakouts as really traditional CANSLIM breakouts. You have pattern, it forms, coupled handle, whatever it may be, and most of the time you're buying at those all-time highs. The low cheat is saying that I'm buying before those all-time highs. I'm buying at a lower area where the probability still looks good. I'm still seeing strength in the name, and I'm cheating my way into the stock. That's why it's called a low cheat. All right. Let's go back. We got ATI. Where am I going? There we go. Okay. ATI. Metal mining, love to see that. That's always a positive. We know this industry is doing very, very well, so that's good. I'm not going to go. You guys can see what's going on with the fundamentals. It's pretty clear on my screen, so you can see it just from that. All right. Charts. Look at the weekly. So, had this big, kind of deep, what do we got? Big, sharp, quick correction, and then kind of recovered. Had this really high volume weekly bar to break out, which is positive. And then I like that now we kind of squatted. We've kind of squatted with the market through this kind of what we've been seeing in the market. But what I love is that this is acting super tight. And when the market is a little more volatile, more brutal. So trading sideways in that kind of 12% range. If you zoom in a little bit more, think there's a couple options, right? If you want a kind of get in a little earlier, maybe you take, when we take out this most recent attempt at a high, you can enter there. Or you can look to get the breakout from this tightness sideways range. That's another option. I like how we've been respecting ever since we kind of broke it. Now we're respecting 21. We did break below. We're not really truly, besides that little shakeout, but overall, I just think this is good looking. The industry's doing well. You can clearly see that kind of flat pattern over here. That's right after this breakout, high volume squat, lower volume after this kind of big move here. So yeah, really like this setup as well. And last one, APP app 11. All right, this is extended. I'm not going to go through the fundamentals. I looked at this. Really, if the days to kind of buy were here, either the second or the third for that double bottom breakout. At this point now, for going, and you can see where I kind of drew this general line minus that high little thing right there. From that like pivot to where we're at right now, we're pretty extended. We're extended off the moving averages. We're kind of even extended off a 5-day, very extended off the 10, the 21, and the 50. You got to just understand at this point, it's just not worth buying something like this far extended. From the even position trade base, from the moving average, swing trade, everything, this is just on all levels extended. If you're in it, I like it. On a weekly basis, volume was not the greatest on the breakout. That doesn't mean I automatically sell or anything like that. So it's acting well, it's climbing, great. If you're not in it, well, maybe we get what we just saw with that last name, where we get that like breakout and squat and tighten. Especially that we still have a little bit of overhead resistance over here, so we might tighten. That might be a possibility. If not, you missed it, goes on without you. You move on. There'll be another name. All right. What else do we got? A couple names that I wanted to look at personally. Was the first one being MU. I don't know why I keep having issue. There we go. All right. MU. This name has been a super, super strong leader. We corrected. We tested that 50. We rallied up from there. Now we kind of pulled back again. Would like to see this digest this a little bit more, right? Because we had what was from peak to trough like a 30% correction, which is good. But time-wise, we're looking at only like 2 weeks. Now, some of these names are just such high flyers that that's all they need. They keep going. So think about that in terms of your risk. There's no perfect way to look at this, but if we have the entry here, right, pull back, attempt, pull back. If we have the entry here, that could, take us off and go to higher highs. But I think personally, I would like to see this digest this big move again a little bit more. We see that it tends to do that, right? You can see this was even a long, low, slow digestion of that pullback, break below the 50, rally, and then again, another kind of correction right there. So this seems to be a little more rapid. So if you are going to take that break from there and say this is like a V shape, I can't even call this a couple of handles, V shape to a little handle, just know the extra risk in it. But ideally, we kind of go a little more sideways, tighten up again, and get a little bit more of a correction through time on this side. I mentioned it, so I want to make sure these gold stocks, AEM, I'm going to bring them all up. So take a mental snapshot of these. Newmont, Goldfield, what was the last one? DDRD, and DRD Gold. All of those getting that VCP type of pattern. Some a little bit cleaner than the others. right? But we're seeing that VCP type of pattern really forming itself through all of these gold, metal miner, kind of a lot of these similar names. So really like these. These have been leading very, very much through the year. They have held up fairly well. They're presenting the possible opportunity to get back in those after some bigger runs. So yeah, as you can see, this was one that I kind of blew because I sold for something else when this was leading. Stupid, but whatever. Is what it is. Let's do a quick another one. Frog, really, really, really strong move. Not a traditional, still shy of that 100% move to be a real true high type flag, but then we kind of corrected in that like less than 15% area. We're going sideways. We're looking like we're forming a really, really at these all-time highs, looking like we're trying to break out. Really big move, not really big, but decent move. A little bit more high of an ATR stock at 6.15% of the ATR. If we could kind of tighten up right around those highs, this would be a beautiful way to enter this. Sales are good. Cup. So no, I wouldn't. Yeah, it's definitely sorry, I thought it was cup with handle. Yeah, I would say this is like a cup, definitely. You know, we pulled back. We're seeing volume lighten up. We had this peak day here, volume coming in on the right side. We're coming near those all-time highs. I would definitely call this like a nice small cup. Not like a big weekly cup, but right, because we're only really 1, 2, 3, 4. So really only a 4-week base, but still cup nonetheless, especially on the daily. So good shot, good observation, Brian. All right, last name. Sorry, I'm really off today. I didn't sleep much. Clicking is off. My typing is off. There it is. My letters are off. I'm typing D's instead of B's. Get this guy off the screen. All right. This is in that healthcare space. This has a lot of overhead resistance, so keep in mind of that. But this is one of those names that have constantly popped up on my list. We've got out of what looks like this stage 1 bottom. We're starting to see that stronger stage 2. You can see that over here. And then now looking like we're giving that first base. So cup, not really a handle, kind of sideways. Would rather see a sharper pullback, but looking like this is forming. So this is just one of those I'm watching. It's in that healthcare space. The fundamentals are pretty, but it's in that leading biotech healthcare area. It's gone on a good run. It looks like it's possibly doing some sort of recovery. It does have the overhead resistance, so be conscious of that. But it is also looking like it's working its way towards possibly giving an entry. I would like to see this maybe tighten up a little bit on the sideways, maybe pull back to give you a little bit more of a handle, shake some people out. But yeah, that's where we're at there. All right, don't see any other names. We've been going for a while, so. All right. Hey, for you guys, there's Discord. People do this all the time, not just to me. There's a lot of really great traders in there. So if you want to keep doing stuff like that with other people, talking about different stocks, Discord links in the description. We're at 1,200 and something people in there. A lot of really, really good traders that know their stuff, that will be glad to help anybody or go through charts with people. All right, let's get this guy off the screen because I'm clearly shot. All right, so final thoughts. Really important to keep a level head going into next week. Clear head, clear level head, not what I'm dealing with today with this lack of sleep. But don't allow, the big thing and the reason I'm saying this is don't allow your opinion to dictate your trading. You want the market action and the stock action to dictate your trading. It can be very easy to look at certain things that have gone on in the past, look at your past trades, whatever it may be, tie some emotions into it, turn on the news and hear the next big, horror of what's happening in the world that means that everything's going to shit, and have that all start affecting how you look at the market. And the opposite, you could sit down and watch the next AI podcast and say that the entire industry is booming. We're never in a time. You have to buy everything now. Don't allow all that to dictate your trading. You have a strategy. You have a strategy for a reason. Follow the strategy. Let the market and let these stocks prove themselves, and let them bring you to increasing exposure through that way. We could really, truly, honestly keep rallying from here. We could have another really strong, great run. You talk to guys like Jim Ropel, and this could be like what we talk about with like the .com boom, which is just the AI boom. We could also be just a fake out, right? This could have just been a shorter fake out rally to get everybody putting in, their money into the stocks, and then we roll back over and everybody gets washed out of everything. We make lower lows, and it's, could be a bloodbath for some people, but we don't know. That's what it comes down to. So that's why it's just important to just be patient. Don't have fear. Don't tie your emotions and all the other nonsense into the market. Look at what's in front of you. Act on what's in front of you. This is a game of probability. That's all it is. So don't overcomplicate things, because the emotions can really screw with your head. Other than that, all right, we got one more. This is it. I'm doing this for you, JC. Actually, JC, it's the first time I've seen you in the comments, so welcome. But I'll go back just for you, and we'll look at COCO Vita Coco coconut water. I do love coconut water. Waiting for a pullback to entry. Yes, 100%. Very extended. This has gone on a pretty good run. You can see, especially on the weekly. Unfortunately, buying here creates a lot higher of a risk. This isn't a pullback. A few days to a moving average. Like, look for your entry. I say, and I'm very broad based in terms of what I'm saying, like your entry, your setup, because I know everybody trades different. Like, I look at Discord, and I've learned this a lot from Discord. There are people in there, right, that are CANSLIM traditionalists that are only buying weekly based patterns. That's their setup. I'm not going to tell somebody they should be going in on a shorter time frame setup. I may bring attention to it, but I'm going to say trade your setup. For a swing trade person, which I'm not the most advanced swing trader, you may have a setup that you see in something, and play that setup. Study your setups. Know your style. There's no person in here that is alike. Everybody's got a little bit different. Somebody else may say I don't trade ascending basis. Somebody else may say I only trade high tie flags. Somebody else may say I only trade pullbacks. So this is extended. That is regardless of how you trade. For us trend following type traders, this is extended. Now, wait for your setup to develop. This could go on without you. That's fine. There's plenty of other names. Let this eventually, because it will, pull back, and then give some sort of correction, some sort of pause, and give you an entry. And that's the last thing I'll say. Like, the big thing that I think is important from a technical standpoint for a lot of people to think about in their head, because you see a stuff like this that maybe you've been watching, you're like, I wish I was in this. Like, look at all these big leaders. Look at prior model book stocks. They all stair step. They don't just go straight up like a shot and arrow into the sky. They will make big moves, and then they'll correct and pause and move sideways, whether through time or whether through actual percentage drops. And then they'll stair step and go again. And then they'll stair step and go again. And then at some point, they'll stair step, and then the steps give out underneath them, and then it kind of turns around from there. So, but the reason that we want to wait for that stair step is we need a logical point to place our risk. And we need our risk and to have a risk plan and know how much we're essentially betting on each name and the risk that we're putting into each buy. Because if you don't, then you can't play that game of probability, because the reality of everything is, even as good as all this analysis is, we're likely going to be right less than 50% of the time. So if the math don't math, if the probability, if you're not making more money than when you're losing more money, that ratio isn't making sense, you're not going to make money. So that is the reason we want to have a logical stop, because you don't want to just say, I'm just going to throw money at the board and have not be able to handle the normal fluctuation of a name and to keep you in it if it is making a big move. Those stair steps give us that point of where we can assess risk, where we know the probability of that setup has higher probability of working. And that all ties into the overall strategy and how pretty much most people, I think, that are watching this trade. So hopefully that helps, JC. But all right, a little long. I'm a little of a, I was late today. I think I screwed up X. I don't even know if X got to see this. I know YouTube did. Didn't sleep much. So sloppy episode. I apologize. We'll be better next week. Sloppy episode, but hopefully this was still helpful. I enjoy doing this, so I thank everybody for joining me every single week. As always, there you guys go. We got YouTube. You guys obviously know if you're watching on this. There's the X account. The link in the description for Discord. Email, especially if you want that ETF list. Deepvue, if you want Deepvue, if you want to check this out, I love the application. You can even message me if you want to hear or see a little bit more about it. Link in my description, and discount code in there. No longer on the wait list, so you don't have to sit there and deal with that. Oh, when am I getting access? You get access now. So, yeah. Other than that, got some cool stuff coming. I'm working on something big, which is why I didn't sleep. It wasn't that I just was out partying. I'm working on something, and I'll keep some people posted. Some people from Discord probably know what I'm working on, but I'm working on something, and I'll keep you guys posted. So just a little teaser there, but thank you, everybody. Enjoy the rest of your weekend, and yeah.